Welcome back. It's Monday, the 24th of February. I've been away to China on business and wasn't able to provide the community an update today. I'm hoping we can go through some of the activities that took place. Let's look at what happened through the week of the 17th to the 23rd. We'll dive into the event and what to expect next week using both fundamental and technical perspectives to help both beginners and advanced traders understand what happened. The fundamental analysis, I want us to focus on the underlying factors driving the market. Think of it as checking the health of the crypto ecosystem beyond just price movement. If you look at the macro level, the Trump tariffs have had an impact on BTC. BTC dipped below $96,000 earlier this month due to the trade war concerns that President Trump was talking about with regards to tariffs. Last week, this narrative continued to weigh on sentiments. Tariff increases cost the tech sector heavily, affecting the blockchain infrastructure and potentially dampening crypto adoption. Trump's reaffirmation of a crypto-friendly stance and the Bitcoin reserve also had a positive impact, keeping the optimism alive, especially for Bitcoin. The Fed stance on interest rates remained a hot topic, with inflation still a concern. Any hint of tighter monetary policy could pressure risk assets like cryptocurrencies. Last week's mixed signals from Fed officials led to choppy market reactions. The Trump and millennial meme coins launched amid Trump's return to the White House saw swings last week after an initial surge and profit-taking that led to corrections, with some analysts warning of wealth destruction in these speculative assets. This reflects a broader trend. Meme coins remain a high risk and high reward play, so one has to be very careful about meme coins. Ethereum faced scrutiny as analysts debated its $5,000 potential for 2025. Positive sentiments tied to the year of the wood snake symbolizing transformation in Chinese tradition buoyed some altcoins, but Ethereum struggled to break key resistance levels. Bitcoin as a digital gold adoption, while Trump's executive order on crypto reserve gained traction, with Bitcoin discussions about the National Reserve intensifying, which bolstered Bitcoin's narrative as a hedge against the economic uncertainty. Globally, government tightened crypto regulations last week, focusing on tax compliance and anti-money laundering. While added short-term uncertainty, it also lent legitimacy to the sector, appealing to institutional investors. So what is the takeaway for beginners? Fundamentals are like the why behind the price moves. News about adoption, Bitcoin reserves, or regulation can signal long-term growth, but volatility often spikes with big announcements. So start by following reputable crypto news sources to understand what is happening in the market. Watch how macro events, tariffs, and Fed policies correlate with BTC dominance. A rising dominance could signal a flight to safety, squeezing altcoins, track on-chain movement to gauge institutional sentiment. The technical analysis uses historical price and volume data to predict future movements. Let's break it down with key examples from last week. On Bitcoin, BTC hovered around 95,000 to 98,000 last week, after rebounding from a 93,000 low on February 17th. It tested a 50-day moving average as support around 94,500, a critical level for bulls. The RSI on the daily chart was sitting at 52, indicating neutral movement, neither overbought nor oversold, suggesting consolidation rather than a breakout. The 50-day moving average crossed below the 200-day moving average briefly by midweek, which is a death cross, spooking traders, but a quick recovery invalidated the bearish signal. A descending triangle formed, with resistance at about $98,000 and a support of about $94,000. But volume declined, hinting at indecision. Picture a candlestick chart with a red and green bar oscillating between these levels. a flat RSI line at 50 and converging trend lines forming the triangle. If you check on TradingView, you will see exactly what we are talking about regarding the resistance at $98,000 and the support at It found support around 3,190, aligning with the 100-day moving average. The signal line showed weak bullish movement. A crossover could signal a push to 3,500. A symmetrical triangle suggests a breakout at 3,000 targeting 1,500. The breakout can hit about 3,000. The market has been consolidating sideways. Coins like XRP and Sol mirrored BTC's consolidation, with many testing key support levels. Sol at about 100, while meme coins like Trump and Millennia saw sharper drops between 20 and 30%. So the takeaway for beginners is that technicals are your win for trades. Learn basic patterns like triangles, support, resistance, and indicators like the relative strength index and moving average, RSI. It's important to take these things seriously. A key takeaway is to watch out for breakout confirmation with volume. BTC's triangle resolution could dictate altcoin fate. Use the fib retracement at about 61.8% level, which is at $96 net for the to pinpoint entries and exits. What events are we expecting in the week of the 24th of February till the 2nd of March? On the regulatory announcement, the U.S. crypto policy update is rumored to suggest that Trump's executive could sort of like follow up with an announcement on the 27th detailing the Bitcoin reserves plan. But we will see what this would lead to. And then the G20 meets on the 28th until the 1st with crypto taxation on the agenda. Clarity here might boost institutional inflow. So we do expect that the G20 might say something about crypto. And then the testnet trial for staking with withdrawals continues with updates expected around February 26. And positive news could lift ETH and staking related to tokens like Rocket Pool, RPL. And then the US GDP data on the 27th of February, we expect it to be published. There is strong growth that could pressure risk assets if paired with the Fed's hawkishness, right? So weak data might fuel crypto as a hedge. So we will see what will take place. And then post-Lunar New Year data could sway altcoin sentiment given China's influence on tech markets. On the 1st of March, we'll get an announcement from China about their economic indicators. Binance's CEO often drops market moving hints or in these sessions. There's a session on it is expected to have on the 25th of February, which is the Binance where you can ask him questions on the live stream. And the meme coin hype cycles, we expect the Trump and Melania volatility as part of the retail buzz will still peak by midweek. The tip for beginners is to mark these dates on your calendar and check your news trackers for what is taking place. For advanced traders, the pre-position trades are based on event catalysts, e.g. buy ETH dips before Shanghai news, or hedge with options on exchange like Bybit if volatility spikes. So buy BTC or ETH weekly. You could even buy it at $100 regardless of price. Because last week's dip of $94,000 was a good entry. This week, watch $95,000 as support. So it's important to hodl, which is to buy and hold, and DCA and dollar cost average. You buy in smaller chunks if you are a bullish person about the future of Bitcoin. If you see Bitcoin in the mid to long term accumulating and price action being on the positive side or the bullish side, then this is the time for you to dollar cost average. As the market is consolidating or shopping, this is the time for you to DCA into the entries. So it's the same for Bitcoin. It will be the same for Ethereum, but we will talk about Ethereum later on today. For advanced traders, if BTC is going to break the 98,000 resistance with high volume, we might see the ride going all the way to 100,000. It's important then to position now what they will do with regards to those. Last week, the crypto market consolidated amid macro uncertainty and meme coins corrections, with BTC showing resilience at key levels. This week, regulatory and network events could spark breakouts or breakdowns. So therefore, beginners should focus on steady accumulation and learning tools, and advanced traders can capitalize on volatility with precise entries. Stay curious, cross-check narratives, and trade not what you hope. Let's get to the next one. Our item number 2 is the Bybit hack. This is important. So let's dive into the details of the Bybit hack. One of the most significant cryptocurrency thefts in history, where over $1.4 billion worth of Ethereum was stolen. This analysis is based on the most incredible sources available as of the 24th of February 2025, reflecting the events that unfolded primarily on the 21st of February. So I'll break it down step by step, focusing on what happened, how it happened, the aftermath, and what it means for the crypto ecosystem. So what happened was on the 21st of February, Bybit, a Dubai-based cryptocurrency exchange founded in 2018, suffered a massive security breach. Hack drained approximately 401,346 from one of the exchange's multi-signature cold wallets, a storage system designed to be highly secure by keeping assets offline. This was valued at about $1.4 billion, making it the largest single crypto heist ever recorded, surpassing previous incidents like the million running network hack of 2022. Let's look at the timeline. The breach was detected around 30 p.m. UTC during a routine transfer from the cold wallet to a warm wallet used for ordinary operations. On-chain analyst ZXBT flagged suspicious outflows around 10:20 a.m., which is about 3:20 p.m. UTC. The crypto community was alerted via Telegram. Bybit CEO Benzo confirmed the hack within 30 minutes, showcasing rapid transparency. The stolen assets included 401,347 ETH, core Ethereum, 90,376 SD staked Ethereum, 15,000 CME, and 8,000 M ETH, totaling roughly $1.46 billion. Though estimates vary slightly between 1.4 billion to 1.5 billion due to price fluctuation and additional tips. Let's look at how did it happen. The hack was a masterclass in sophistication, exploiting human and technical vulnerabilities rather than brute forcing the blockchain itself. The hackers used a phishing-style attack to manipulate the user interface of Bybit by multi-sign wallet, likely powered by Safe, a popular wallet provider. When Bybit signers approved what appeared to be a legitimate transfer to the warm wallet, the user interface showed the correct address and a safe URL. However, the underlying signing message contained malicious code that altered the smart contract logic. Instead of authorizing a simple transfer, the signers unknowingly modified the wallet's contract, granting the attacker full control. This likely involved delegate call function, a risky Ethereum feature that executes external code, redirecting authority to the hacker's address. Once control was seized, the attacker drained the wallet's entire holdings, transferring them to an unidentified address. Blockchain records tracked via Etherscan show the funds were then split across 53 wallets, with initial transfers in chunks of 10,000 each, roughly about $27 million each. Multiple credible sources, including blockchain analyst firms Elliptic, Arkham Intelligence, and TRM Labs, attribute the attack to North Korea's Lazarus Group with high confidence. This state-sponsored hacking collective has a track record of massive crypto thefts, the $625 million from Ronin, the $200 million from South Korea's exchange in 2017. Their involvement is inferred from address overlaps with past hacks and their sophisticated obfuscation techniques. So, the insight for beginners: imagine a blank vault requiring multiple keys to open. The hacker tricked the key holder into thinking they were moving money from a safe place, but instead they handed over the vault control. For advance, the use of masked user interface suggests a social engineering exploit, possibly targeting all signers' devices or compromising safe servers. Check Etherscan for the exploiter's address and tagged as Bybit exploiter to see the fund's movement live. Bybit's reaction was swift strategy, aiming to stabilize user trust and mitigate financial fallout. The immediate action taken by CEO Benzo was a live stream to acknowledge the breach, emphasizing that only one ETH wallet was affected and that other wallets remained secure. A surge of withdrawals, 100 times normal volume, hit the exchange post-hack. Bybit processed 70% within hours. ETH withdrawals were paused until a bridge loan was secured. Bybit showed users that client assets were one-to-one backed with roughly $20 billion in reserves. So we spoke about the backing, right? Or the proofs of having security. We spoke about this when we were talking about stable coins. This is the exchange, and therefore it provided that security. So it had the insurance around the backing. Bybit secured emergency funding covering 80% of the stolen amount, roughly $1.12 billion, ensuring solvency even if the funds aren't recovered. Bybit clarified that they wouldn't rush to buy on the spot market, avoiding price inflation. Bybit launched a recovery bounty program offering 10% of the recovered funds, up to $140 million, to cybersecurity experts who helped retrieve the assets. They are collaborating with law enforcement and firms like Fireblocks and Arkham. The ETH fell from 2,823 to 2,685, roughly 8% drop, as news broke, reflecting panic selling. Bitcoin dipped by 5% from $99,000 to about $95,000. By February 23rd, ETH stabilized around 2,700 as buying pressure eased. The hack dampened Ethereum's movement, already weakened by community controversies, adding bearish pressure. Beginner's takeaway: Bybit acted fast to reassure users. Think of it like a store promising refunds after a robbery. The market dip was temporary, but shows how news moves prices. Advanced takeaway: the Lazarus Group's 500,000 plus ETH overhaul exceeds Vitalik Buterin's holdings of 240,000 ETH. Tracked wallets suggest they will use Mixer's Tornado Cash to launder funds, complicating recovery. Last note for Ethereum flow data, because that will help you to see where the volume moves on Ethereum. Awarded ZEC XBTC a 50,000 Arkham bounty, which is about $31,500,000 for linking the hack to Lazarus. The stolen ETH is being dispersed via decentralized exchanges and private protocols, though selling such a volume is challenging under scrutiny. Some reports, e.g. Coinpedia, suggest Bybit recovered the $1.46 billion using loans and treasury funds, but critics like analyst Hermes Psychopomp argue that this is misleading. Bybit still owes lenders, so losses aren't truly offset. So for the industry, even multi-sign wallets aren't foolproof if human error or the user interface flaws are exploited. This may push exchanges to adopt hardware-based signing or air-gapped system. With 2024 crypto losses of about $2.2 billion on the chain analysis, regulators might tighten exchange oversight, especially if state actors like North Korea profits. The Bybit hack really exposed the crypto world's Achilles heel: sophisticated attacks exploiting trust in systems and people. While Bybit's response was commendable, the Lazarus Group's haul underscores ongoing risks. Beginners should keep this as a wake-up call to learn self-custody. Advanced users might eye the market dip as a buying opportunity, and check the stolen funds for the bounty potential. So it's important for us to really note what took place with Ethereum. So in Ethereum, as I've said in the previous episodes, I've been in the accumulation phase. So this retraced its position, which gives an opportunity to accumulate. Remember, you can't destroy the ETHs. Even though they are stolen, they would need to convert them to liquidity, convert them to cash. But what this is going to do is, unfortunately, it's going to have this impact of moving the market artificially. What we spoke about the risks of the crypto market, I hope now these incidences are putting into better appreciation what I meant. Just like when I spoke about the cold wallets, the hot wallet, the exchange-based funds, the off-exchange funds, it's important to keep your crypto in multiple. If you buy a Bitcoin and Ethereum, those are assets of value and assets that will appreciate with time. And if when you buy them, you want to take them off chain. You don't want to keep them on the exchange, and neither do you want to keep them on the hot wallet. You want to keep them in cold storage. But if you are going to transact with them, when will you build wealth? Because then it means you buy Bitcoin now and you think you will sell. Now compare Bitcoin to gold. You don't buy gold today and then tomorrow you sell. Because if you do that, it means you are a small time frame trader. So you trade the choppiness. But that asset is not an asset for a choppy market. It's an asset for long in the market. Remember, last week I gave the price action of Bitcoin and I showed over the years how Bitcoin has spiked. We then started the adoption cycle for the past 2 Sundays where we're talking about how the crypto, more especially Bitcoin, has been adopted. We also spoke about the exchange traded fund and how the exchange traded fund has attracted a lot of volume and liquidity into the crypto market. So if you are looking at Bitcoin, you are looking at an asset of security. And therefore, you treat it differently when you take a position on it for a medium to long-term investment. You don't take a position for a short-term investment. This is the opportunity now when the market retraces to accumulate. You can dollar cost average, right? DCA. When you dollar cost average, what it means is if you've got $500, you don't use the full $500 to buy your position on the asset. You have intervals. Either you buy 100 at a certain point, 100 at a certain point, 100 at a certain point, 100 at a certain point until you finish the 500. Or you buy 100 at a certain point, 200 at a certain point, 300 at a certain point, then you finish your position. It's up to you how you buy up your 500 if you got 500 or buy up any amount. It's called dollar cost averaging. So you average the positions that you are taking. What it then does is blends your portfolio, meaning you didn't buy at a single price. So your portfolio didn't buy at the time that Bitcoin was $96,000. You bought at $96,000, you bought at $95,600, you bought at $94,000. Therefore, you blend the value of what you bought your asset to, rather than just buy at 96,000 and then Bitcoin starts to trace back. So that's a strategy that is used by all traders. Mark the events for the week that we spoke about earlier on. And that's all that I have for today. I wish you profitable trades this week. Cheers for now. Bye.